Imagine opening a company's financial report, like you're holding their stock, and you see their operating profits just surge by an astonishing 65%.
Oh, yeah. I mean, you are definitely popping champagne if you see that.
Exactly. I
Yeah.
mean, you'd feel like a genius. But then, you turn to the footnotes,
Yeah.
and you realize their actual day-to-day sales from literally just moving product out the door, those just dropped by 4%.
Right, which is just a massive disconnect.
It really is. You're
Yeah.
suddenly looking at a monitor displaying like two completely different heartbeats for the exact same patient.
Yeah, it's the ultimate financial paradox, to be honest. One metric suggests a corporation is just sprinting a marathon, breaking all these historic records.
Right.
But then the underlying operational metric suggests the business is actually decelerating.
Well, today we are bringing you right into the center of that paradox. Welcome to the deep dive.
Thanks. I'm really excited to get into this one.
Me too. We are looking at a stack of sources today that reads more like a corporate thriller than, standard accounting. We've got Novo Nordisk's official Q1 2026 financial report, a whole flurry of institutional analyst briefings, and
And we're even factoring in some retail investor sentiment from Reddit, right?
yes, exactly, just to understand the market's psychological reaction to all this. Because right now, you have a company operating at a scale that is genuinely difficult to comprehend.
Oh, absolutely. They're navigating some brutal drug pricing reforms in the U.S. right now.
Yeah, while simultaneously defending their territory against really fierce competitors. And of course, attempting to satisfy an absolutely insatiable global demand for their GLP-1 weight loss medications.
It's wild. Our mission today is basically to separate the headline hype from the underlying financial reality.
Right, because we are dissecting a corporation that is pivoting its entire long-term strategy in real time. And all while the global market watches, every single move they make.
They really don't have any room for error here.
Okay, let's unpack this, because we have to start with that glaring contradiction in the numbers. Looking at the Q1 report, it really is just a tale of two spreadsheets.
That's a great way to put it, yeah.
Like, the top-line press release paints Novo Nordisk as this invincible juggernaut. Reported sales are up 32%, reaching 96.8 billion Danish kroner.
Which is just a staggering number on its own.
It is. But then you strip away the accounting mechanics to look at their adjusted numbers. The actual revenue from patients buying medicine and sales fell by 4%.
And their adjusted operating profit dropped by 6%.
Right. So what is the structural mechanism driving this 32% illusion?
So to understand the illusion, we really have to look at the U.S. 340B drug pricing program.
Okay, remind me, what exactly is that?
Well, it's a federal program that basically requires pharmaceutical manufacturers to sell outpatient drugs at profoundly discounted prices.
To who specifically?
To eligible healthcare organizations, so places that typically care for uninsured or low-income populations.
Got it. So they have to basically give these drugs away for a fraction of the cost.
Exactly. And for years, Novo Nordisk had to set aside or provision a vast reserve of capital on their balance sheet just to cover the anticipated cost of these mandatory rebates.
So it functions kind of like an accrued liability.
Yeah, pretty much.
Like they had to assume the absolute worst case scenario for how much product would flow through those steeply discounted channels and then just legally lock that money away.
Precisely. But recently, they conducted an audit of the actual utilization.
Okay, and what did they find?
Well, whether it was due to tighter compliance definitions of what actually qualifies as an eligible 340B pharmacy, or maybe just shifting patient demographics, Novo Nordisk realized they had vastly overaccrued.
Oh, wow. So they saved too much.
Right. They did not owe nearly as much as they had legally braced for, so they just reversed the provision.
Wait, reversed it. So where does all that money go?
That action suddenly dumps 4.2 billion US dollars, or roughly 26.8 billion Danish kroner, straight back onto their income statement for this quarter.
That is insane. $4 billion just materializes.
Yeah, exactly.
Which creates this fascinating optical illusion. It's somewhat akin to corporate accrual accounting acting as a time machine.
Oh, I like that. How do you mean?
Well, think about it like finding a massive forgotten tax refund in the mail. or finding an old escrow account from 3 years ago that finally clears and you deposit it today.
Right, right.
Your reported revenue for this month looks spectacular. You feel incredibly rich.
Mm.
But if you look at your actual base salary from the job you work every day, your pay was actually just cut by 4%.
Yeah, it's a one-time paper windfall. It has literally zero bearing on the cash flowing from pharmacies today.
That is such a wild dynamic.
It really is an excellent way to conceptualize the gap. And what's fascinating here is the market's reaction to this discrepancy.
Yeah, because the Reddit threads were definitely confused.
Well, you would assume institutional investors, the analysts who exist strictly to read the fine print, you'd think they would penalize the stock upon seeing that underlying revenue actually dipped 4%.
Right, because the core business shrank a little.
Exactly. Instead, following this report, Novo Nordisk stock trended upward by over 7%.
That is the piece that feels entirely counterintuitive to me. Like, why are investors just ignoring a fundamental drop in base revenue?
Because the market is forward-looking. Always. Investors are looking past the 340B paper profit, and they're looking past that slight operational dip.
To focus on what exactly?
To focus on a singular, unprecedented bright spot in the earnings data, the Wegovy pill.
Ah, the oral GLP-1.
Yes, exactly.
Right, because we finally have the first quarter of actual sales data for the oral version of Wegovy, which officially launched in the U.S. on January 5th, 2026.
And the numbers are fundamentally altering the landscape.
I mean, in Q1 alone, this pill generated 2.26 billion Danish kroner. That's roughly 355 million US dollars.
Yeah, which nearly doubles the consensus forecast from Wall Street. Nobody saw that volume coming.
That is a massive beat.
The prescription volume is what truly stands out here, honestly. The data indicates they hit 1.3 million prescriptions in just the first quarter.
1.3 million in 3 months.
Yes. And they have already crossed 2 million total scripts since the launch. By mid-April, weekly prescriptions were exceeding 200,000.
Wow.
Analysts are categorizing this as the strongest ever GLP-1 volume launch in United States history.
Which honestly is a logistical triumph, especially when you consider the biological hurdle they had to clear just to make this thing work.
Oh, absolutely. The science behind it is incredible.
Right, because normally if you just swallow a GLP-1 peptide, your stomach acid destroys it immediately.
Yeah.
That's why these drugs have historically been injections.
Yep, the stomach just breaks it down like food.
Exactly. So to make this pill work, Novo Nordisk had to co-formulate the semaglutide with this absorption enhancer called SNS.
Right, the SNSC buffer.
Yeah, which essentially creates this localized temporary buffer against your stomach acid, right? It allows the peptide to actually cross the gastric lining intact.
It really is a brilliant piece of pharmacology.
It is, but I have a strategic question about the business model here.
Sure, what's that?
If Novo Nordisk is suddenly moving millions of these daily pills, aren't they just cannibalizing their own highly profitable injectable market?
That is the million-dollar question, right?
I mean, if I'm a patient and I'm tired of refrigerating my pens and dealing with needles every week, I am immediately asking my doctor to switch me to the pill.
Oh, 100%.
Yeah.
A lot of people hate needles.
Right. So it seems like Novo is just shifting revenue from one column to another without actually growing the overall pie.
Well, that cannibalization risk was genuinely the primary concern for most healthcare analysts heading into this quarter.
Okay, so did it happen?
No. Novo Nordisk CEO Mike Doustar addressed this directly. He stated that the data shows the overlap is surprisingly minimal.
Really? I find that hard to believe, to be honest. How is the needle phobia demographic large enough to sustain 2 million independent prescriptions without eating into the Ozempic or injectable Wegovy base?
Well, it goes much deeper than just needle phobia, though, that is a significant barrier to entry for a lot of people.
Sure.
But we really have to look at the delivery channel here. Novo Nordisk didn't just place this pill in traditional brick-and-mortar pharmacies.
Okay, what did they do?
They aggressively partnered with major telehealth infrastructure. We're talking about companies like Ro, Weight Watchers, and LifeMD.
Oh, wow.
Yeah, by integrating an oral medication into these subscription-based telehealth models, they completely unlocked the self-pay channel.
Ah, I see.
They captured this massive demographic of patients who lack insurance coverage for weight loss, but who are perfectly willing to pay a predictable, out-of-pocket monthly subscription.
Right, because of the convenience.
Exactly. The convenience of a tablet just shipped directly to their front door every month. You open an app, chat with a doctor, and the pill arrives.
That is so smart.
Yeah.
So they radically expanded their total addressable market rather than just cannibalizing their existing one.
Exactly. They built an entirely new distribution highway specifically designed for the pill.
That makes total sense.
Okay.
But that brings us to the most severe tension in this report.
Yeah, the pricing drop.
Right. Because if they're capturing all of these new patients and volumes are hitting historic highs, why did their U.S. operations adjusted sales still drop by 11%?
Yeah, that 11% drop is the direct consequence of the U.S. drug pricing wars. It is brutal out there right now.
Just absolutely brutal.
Novo Nordisk is operating inside this intense pricing pressure cooker, and it's basically dictated by federal policy.
Right.
In November 2025, they entered into a most favored nations agreement with the U.S. administration.
The MSN agreement.
Yep. And the underlying mechanism of an MFN agreement is that the government leverages its massive purchasing power to basically demand the absolute lowest price the manufacturer offers anywhere else.
Right, so the government says, whatever deal you're giving your best customer, we want that deal too.
Exactly. Now, the goal there was to expand Medicare and Medicaid access to GLP-1s for millions of Americans, which is great for public health.
Of course.
But the unavoidable trade-off for the company is a seismic contraction of their list prices.
Yeah, and the sources we're looking at map out exactly how steep that cliff is. Effective January 1st, 2027, the list price for both Wegovy and Ozempic is going to drop to $675.
Which is a massive hit.
I mean, for Wegovy, that represents a 50% price reduction, just overnight. And for Ozempic, it is a 35% cut. That is a staggering blow to their profit margins.
It really is. But we also have to recognize that they are not agreeing to these concessions purely to appease government regulators.
Right, they have another massive headache.
Exactly. They are submitting to these price cuts because Eli Lilly is effectively forcing their hand.
The defining corporate rivalry of the pharmaceutical sector right now.
Oh, without a doubt. It's like Coke and Pepsi, but with billions of dollars of biotechnology. Eli Lilly's GLP-1 and GIP injectables are expanding at just a terrifying velocity. The Q1 data shows Lilly's obesity drug, Zepbound, grew by 80%.
80%.
And their diabetes drug, Mounjaro, grew by 125%.
That is just unbelievable momentum.
Right. So Novo Nordisk has to slash their prices just to defend their market share against that kind of threat.
Though it is worth noting, that Novo Nordisk is currently winning the battle on the oral front.
Yes. Definitely.
Because Eli Lilly launched their own oral competitor, Foundayo, but the early data shows the Wegovy pill is absolutely crushing it. It's outpacing Foundayo prescriptions by a 5-to-1 margin.
Yeah, that 5-to-1 ratio is critical because it highlights the singular strategy that is really keeping Novo Nordisk afloat right now.
Right, and here's where it gets really interesting. And well, if we distill this entire Q1 report down to its absolute essence, it is a high-stakes game of volume versus price.
Yeah, that's exactly what it is.
Yeah. Like, think of it like a movie theater that is desperately trying to compete with some massive new streaming service.
Okay, I like this.
Right. To get people in the door, the theater just slashes its ticket prices by 50%. But you don't have high-margin popcorn to save your bottom line here.
Right, no concession stand to bail you out.
Exactly. You literally just have to run the projector 24 hours a day, pack every single screening room to the absolute fire code limit, and just hope the sheer overwhelming volume of cheap tickets makes up for the premium you lost per ticket.
That is spot on.
You are working twice as hard just to maintain your exact same baseline revenue.
That analogy perfectly isolates the economic reality they're facing. When Novo Nordisk raised their 2026 guidance, they were essentially telling the market, yes, federal regulations and Eli Lilly are forcing our prices into a downward spiral, but
we're selling so many tickets it doesn't matter.
Exactly. We are finally pushing enough volume through the theater doors to stabilize the business. However, relying purely on volume on a heavily discounted product is a really precarious long-term strategy.
Oh, incredibly precarious.
Right. So to actually defend their profit margins, they have to create a new premium tier.
Which perfectly explains the strategic timing of Wegovy HD.
Precisely. If your standard product is being commoditized by price cuts, what do? You introduce a high-dose premium alternative tailored for a more severe demographic.
Right.
So the FDA approved Wegovy HD, which is a massive 7.2 milligram injectable back in March, and Novo officially launched it in April.
And the clinical mechanics here are just vital to understand. Because in their STEP-UP trial, Patients on Wegovy HD achieved a 20.7% mean weight loss.
Yeah, and crossing that 20% threshold is a monumental clinical milestone.
It really is. It moves the drug from just, standard weight management into territory that actually rivals the outcomes of bariatric surgery.
Exactly. And that level of efficacy absolutely commands a premium price point.
It does. It gives them a high-margin product to back. But introducing a premium tier is really only half of their defensive strategy, right?
Yes. The other half is legally eliminating the gray market. Which brings us to the compounding pharmacies.
Oh man, this has been such a fascinating legal loophole to track.
It really has.
Because for the past 2 years, compounding pharmacies, so these are facilities authorized under Sections 503A and 503B of the Federal Food, Drug, and Cosmetic Act, they were legally permitted to manufacture and sell unbranded generic versions of semaglutide.
Which is crazy when you think about it.
Right. But they were only allowed to do this because the FDA officially classified the branded drugs as being in shortage.
Yeah, and that shortage classification was bleeding literally millions of dollars out of Novo Nordisk's ecosystem every single month.
Because patients were just going to these third-party clinics instead.
Exactly, and the most frustrating part for Novo was that the fundamental bottleneck was never actually the raw material. It wasn't the drug itself. It was the fill-finish capacity.
Right. Synthesizing the active pharmaceutical ingredient, the API, in a giant vat is relatively straightforward.
Yep.
But taking that sterile biological liquid and precision loading it into millions of complex multi-dose auto-injector pens without any contamination, that engineering process is incredibly difficult to scale.
Oh, it's a massive engineering headache. But in late 2025, Novo Nordisk finally solved that bottleneck.
They threw money at it.
A lot of money. The sources note they deployed 11.3 billion Danish kroner this quarter alone.
Wow.
Yeah, and that was entirely directed toward API and fill-finish manufacturing.
For building out the factories.
Exactly. And by proving to the government that they finally possessed the industrial capacity to meet national demand, they basically forced the FDA to remove semaglutide from the official shortage list.
And the moment a drug comes off that shortage list, the legal protection for compounding pharmacies just totally evaporates.
Overnight, they are no longer permitted to manufacture those copycat versions.
That is wild.
Yeah.
And the results of closing that loophole are highly visible in this report, aren't they?
Very much so. Novo's internal tracking shows that the compounded share of the U.S. market has basically halved since November.
Wow, just cut in half.
Yep. That represents a vast influx of patients who had previously strayed to those third-party clinics and are now being legally funneled right back into the branded Wegovy and Ozempic ecosystem.
So the strategy is really tripartite. Like they're capturing the needle-averse and self-pay demographics with the oral pill.
Right.
They are capturing the severe clinical demographic with the premium Wegovy HD.
Exactly.
And they are legally recapturing the gray market by aggressively scaling their fill-finish infrastructure. I mean, it is incredibly aggressive defense.
It's a masterclass in corporate defense, honestly.
But looking at that capital expenditure, I mean, 11.3 billion kroners spent on manufacturing in a single quarter. I really have to wonder about the long-term sustainability here.
How so?
Well, are we just entering a biological arms race where they're forced to spend billions endlessly to develop higher and higher dosages, build more factories, and ultimately just crush their own profit margins anyway?
This raises an important question about the fundamental nature of a pharmaceutical moat.
Okay.
Financial analysts are fiercely debating this exact cost trajectory right now because building sterile fill-finish capacity at a global scale requires just staggering capital.
Right.
And that expenditure will remain heavy through at least 2027. However, by legally shutting down the compounders and establishing both this oral and high-dose injectable infrastructure, Novo Nordisk is constructing a truly durable demand-side moat.
Meaning the barrier to entry for any future competitor just becomes impossibly high.
Yes, precisely. They are enduring the heavy margin compression right now to build a manufacturing and distribution ecosystem that will be nearly impervious to dismantling over the next decade.
Okay, I see. So what does this all mean? If we synthesize the entirety of this deep dive, Novo Nordisk entered this quarter facing intense margin pressure from U.S. federal pricing reforms and just relentless competition from Eli Lilly's Zepbound and Mounjaro.
Right, which drove those adjusted U.S. sales down 11%.
Exactly. Yet, because they successfully engineered an oral pill that shattered volume expectations with 2 million prescriptions, and because they spent the massive capital to eliminate the compounding gray market, that overwhelming volume is finally mitigating the price erosion.
Yep. The theater's packed.
The theater is packed, which perfectly explains their raised 2026 guidance. They improved their expected adjusted sales decline from a really pessimistic -5% to -13%, up to a slightly more manageable -4% to -12%.
It really represents a structural pivot for the company. The whole narrative is shifting from a story of inevitable price erosion to a story of sheer volume dominance.
Right.
The broader market is just going to be scrutinizing the data moving forward to see if they can actually maintain that equilibrium.
And the timeline for that scrutiny is already set. The next immediate milestone is the Q2 results in August. But looking at the sources, they suggest the true crucible will be the Capital Markets Day on September 21st, 2026.
Oh, that September date is absolutely critical.
Why is that the big one?
Because that is when executive management must stand up and justify these multi-billion-dollar capacity investments to long-term shareholders.
Ah, they have to prove the math works.
Exactly. Institutional investors will be laser-focused on the R&D pipeline. Specifically, they'll be looking at advancements in the oral amycretin program.
Okay.
They want to see if Novo Nordisk actually possesses the scientific innovation to sustain this dominance deep into the 2030s.
Man, it is just a phenomenal intersection of biotechnology, federal regulation, and raw industrial capitalism.
It really is.
But as we wrap up today, I want you, the listener, to consider an implication that extends far beyond corporate guidance or analyst spreadsheets.
You're talking about the broader societal shift.
Exactly. Because we are tracking the real-time evolution of GLP-1 medications here. I mean, they originated as incredibly expensive, refrigerated, highly specialized injections prescribed exclusively for severe chronic illnesses.
Right, very niche.
But with the massive launch of the Wegovy pill and the integration of these telehealth subscription models, the friction of treatment is just vanishing.
It really is. We are rapidly accelerating toward a reality where biological appetite control is administered via a cheap, mass-market daily tablet.
A reality where adjusting your metabolic satiety is just as routine and accessible as taking a morning multivitamin.
Yeah, that's wild to think about.
And when that accessibility reaches true global scale, how does that shift fundamentally re-engineer the entire global economy?
Oh, the ripple effects would be massive.
Right, like what happens to the agricultural supply chain, or the fast food industry, or the fitness sector, when literally hundreds of millions of consumers simply swallow a tablet with their morning coffee and structurally reduce their caloric intake.
It changes everything.
It does. We began this deep dive by examining the contradictory vital signs of a single pharmaceutical company. But the medicine they are scaling has the potential to rewrite the vital signs of the entire global food economy.
It is a profound transition to consider.
It really is. Thank you for joining us, and we'll catch you on the next deep dive.